Gold is a credible, viable alternative, not just to the dollar, but to the euro and to the yen and to every fiat currency. And remember, before the dollar became the reserve, gold was the reserve. The entire world was on the gold standard. And it only got on the dollar standard because the US dollar was backed by gold. It was as good as gold. The US government promised to pay gold for its dollars. So that's how we moved from gold to the dollar. Gold is going to be more divisible, more portable, and a better medium of exchange, a better unit of account when it's tokenized on a blockchain.
In this discussion, Peter Schiff, the CEO and chief economist of Euro-Pacific Asset Management, addresses the Federal Reserve's strategy on inflation and asserts that they are deliberately concealing the truth from the public to avoid a crisis. He also argues that gold will be the only viable solution in the long run and that the spiral of debt will only intensify. Peter contends that the present 2% inflation goal is no longer pertinent and that the government has established a safety net. Peter said, "I still think that 2023 could end up being one of the worst years ever and maybe the worst year ever for the US dollar, and that weakness is going to help propel consumer prices much higher." According to him, governments are unlikely to enforce a new gold standard. Additionally, he remarks that I think that the free market is going to reject the dollar and other currencies because they're a flawed form of money because they are no longer a store of value. If you want to stay updated with the latest news and discussions, hit the subscribe button and ring the notification bell to get notified of our new videos.
That's how I would describe this. I mean, we're seeing it real time too with things like cryptocurrencies, right? Look at all this nonsense. So yeah, I mean, people have faith in the dollar. They trust the dollar. They believe in the dollar. They're going to be disappointed that, they're going to end up losing a lot of money. Look, just like we started talking about subprime mortgages, a lot of people bought into that nonsense. They own subprime mortgages. They believed the AAA ratings. They thought they were going to get their money back. Now, to me, it was obvious. I was talking about how these securities should have been rated F because they were going to fail. Just, look at my mortgage banker speech on YouTube from 2006. This was obvious to me. Why was everybody else so clueless? Well, that's how they're all clueless now, because U.S. Treasuries, as far as I'm concerned, are subprime debt. I mean, we can't pay any more than, the subprime borrower can pay. Only difference is we got a printing press and we'll use it. But that just means the money is worthless when the creditors get paid. But that's the same thing as default. When we started the Federal Reserve, I mean, the dollar's lost about 99% of its value since then, measured in gold. Because back in 1913, a dollar, you only needed $20 to buy an ounce of gold. Right? So if you had $20, you had an ounce of gold. Now you need over $1,800 to buy that same ounce of gold. So that's a huge decline in the purchasing power of the dollar, over that 100-year time period.
The commonly accepted viewpoint is that the economy will be feeble enough to curb the Federal Reserve, but not feeble enough to significantly affect corporate earnings. Peter, on the other hand, contends that they're wrong. The economy is going to be much weaker than investors think, and it's going to have an even bigger impact on earnings than investors think. But inflation is going to be much higher than anybody thinks, and that is really going to complicate the situation for both the Federal Reserve and the economy. There is a prevalent belief in the financial markets that the Federal Reserve can effectively lower inflation to 2% and simultaneously orchestrate a mild economic slowdown.
Why don't investors perceive that gold is really worth a lot more than $1,800? Because they believe the Fed is going to be successful in returning inflation to 2%. And so they're pricing gold for a global economy where inflation stays at 2%, as far as the eye can see, as soon as the Fed, gets it right back down there. And they believe that this fight against inflation, as the Fed succeeds in returning inflation to 2%, that this fight is also going to be a negative for the market, for gold, because it's going to push up the dollar, which is going to hurt gold, right? Rising rates, they say, is bad for gold. So investors believe a bunch of things about the economy and gold, similarly the way they believed a bunch of things about real estate and those subprime mortgages that are going to turn out to be false. As I said earlier, the Fed is not going to be able to get inflation anywhere near 2%. We are going to be living in a high inflation environment indefinitely, much, much higher than 2%. And we're going to have negative real interest rates. Because even with 5, 6, 7, 8% interest rates, the inflation rate is going to be above that. So that is an environment where gold should be soaring. And when the price of gold has to get revalued based on a much higher inflationary environment than what the investors now perceive.
Gold is experiencing a significant resurgence as fiat currencies continue to depreciate. Finally, Peter asserts that gold is more efficient, less volatile, less costly, and quicker. A considerable number of individuals hold the belief that reinstating the gold standard is an unfeasible prospect. It can never happen. They argue that the world's population is too vast, and the economy is far too intricate. However, there are many others who view the return to the gold standard as an almost miraculous solution to contemporary challenges such as big government, the welfare state, and inflation.
What is an ounce of gold worth today if inflation is going to compound at 10% instead of 2%? Well, what is it worth? $10,000, $15,000? I mean, I don't know. I haven't really done the numbers, but it's worth a lot more than what you think it's worth when you believe inflation is not a threat and is going to stay low. So at some point, just like when reality hit the subprime market and all of a sudden the bottom dropped out and there were no bids and it went to zero, when the market investors come to the same realization about inflation, then gold's going to soar. There'll be all bids, there'll be no offers. Nobody will want to sell gold at these prices, and the price will go up very quickly. How high, it's hard to say, but much higher than it is now.
Here for another 2-3 months of malaise in the gold sector, or
well,
where do you see impulses coming from?
Look, I think there's a lot of support around 1,800, so I really wouldn't look for prices to move much lower than that. If they move lower, there is some resistance, probably 1,900, 2,000 up towards the highs, below 2,100. But once we really get above 2,100, there is no resistance, right? We're at all-time record highs, and I think, you've got clear sailing. Again, it's a question of when is the narrative going to change? Now, I am in the pivot camp. I firmly believe that when push comes to shove, the Fed will pivot, meaning that when the fight against inflation does enough collateral damage to not just the markets, but really the financial system and the economy, when you start to see potential bankruptcies or defaults, when you start to see the beginnings of, or maybe even a financial crisis. Because remember, the financial crisis of '08 was a result of higher interest rates. That's what pricked the bubble. And the problem was a lot of debt was taken out that couldn't be repaid at higher rates, right? So the same thing is happening now. It's just not concentrated in subprime mortgages. It's just more broad. There's a lot more debt that is non-payable.
The advent of blockchain technology has enabled the tokenization of gold, allowing for its smooth transfer from one party to another. Although inflation has been persistent for a considerable period, prices of nearly all commodities, including gold, have soared. As a result, gold would prove to be a more reliable form of currency than most paper currencies. This concludes our discussion for today. Do you agree or disagree? And what are the reasons for your stance? We encourage you to share your thoughts in the comment section below. If you found this video informative, please give it a thumbs up. Don't forget to subscribe to our channel to stay informed on the latest news and videos. Thank you, and we'll see you in the next one.